Welcome back to the Digital Asset Report. Crypto markets are starting the week with a relief rally. Bitcoin is trading over $66,000 and Ethereum is near $1,800. The macro backdrop also improved after President Trump said the United States and Iran reached a deal to reopen the Strait of Hormuz, sending oil lower and giving risk assets a strong rally to open the week. Take a listen to Vice President J.D. Vance on the deal.
Well, we already signed the deal digitally yesterday, and there's been no money released, and that won't change, George. Again, this is a performance-based thing. If we see the Iranians making, for example, taking action to eliminate their stockpile of enriched material, then yes, sanctions relief will follow. If we see the Iranians taking action to allow the kind of verification regime that we need to see to know that they're not going to build a nuclear weapon, yes, sanctions relief will follow.
The lead story this week is regulated market access. On June 12th, the SEC approved New York Stock Exchange ARCA's proposal to list and trade the T. Rowe Price Active Crypto ETF. The approval moves the ETF market beyond single asset exposure and toward actively managed crypto allocation inside regulated exchange infrastructure. The fund is designed to hold a basket of eligible digital assets. This matters because investors are not just getting Bitcoin wrappers anymore, they're getting actively managed crypto allocations. The crypto ETF market is beginning to look more like the rest of asset management, with active strategies, broader baskets, and institutional custody built into the product. The CFTC also made an important move on crypto derivatives. On June 12th, the Commission gave U.S. registered exchanges a short-term path to remove expiration dates from certain digital commodity futures, effectively turning them into true perpetual futures. That brings a market structure that has mostly lived offshore, closer to U.S. supervision, with required customer notices, risk disclosures, and limits on what exchanges can change. Prediction markets are the follow-on story. These markets have existed since the 1990s, but the rulebook has never clearly defined which real-world events can support tradable contracts. Last week, the CFTC proposed new rules for event contracts tied to areas like war, terrorism, assassination, gaming, and unlawful activity. The goal is to define key terms, create a clear review process, and decide which contracts serve the public interest. Here's CFTC Chair Mike Selig on the new initiative.
We put out an advance notice of proposed rulemaking on prediction markets, taking action to set clear rules of the road for this new market. And we recognized, of course, that this asset has been around for a long time. It's been around since the 90s, but there have not been clear rules around what sorts of products can be offered and how the CFTC is going to consider what's in the public interest when choosing to accept or reject these contracts. So there are certain areas prescribed for us in our statute. That's war, terrorism, assassination, gaming, and activities that are illegal under federal or state law that we're intended under the statute to take a special review of. That means that we consider what's in the public interest when looking at those contracts, but our statute doesn't prescribe specifically what definitions apply to, for example, gaming. So we are looking to propose a definition for gaming that's very much common sense, what you would think of as gaming, sports, recreational entertainments, games and that sort of thing. And then also setting for some factors that we're going to assess in determining what's in the public interest.
Meanwhile, stablecoins moved into mainstream visibility. World Liberty Financial became an official sponsor of UFC Freedom 250 at the White House this week, with a $250,000 performance of the night bonus pool paid in USD1. That's World Liberty Financial's dollar-backed stablecoin issued and backed by BitGo. The event drew plenty of attention, but the stablecoin payment is the real signal that matters. And BitGo also had a major institutional milestone this week. BitGo Holdings was named to the 2026 Fortune 500 in its first year as a public company, debuting at number 273 with $16.2 billion in 2025 revenue. Fortune also ranked BitGo number 9 in the CFI category of its inaugural Crypto 100. That recognition puts custody, settlement, staking, trading, and regulated infrastructure inside the same corporate ranking system used to measure America's largest businesses. On the tokenization front, Digital Asset, the company behind Canton Network, raised $355 million in a new round backed by A16Z Crypto, HSBC, BNP Paribas, Citadel Securities, and others. Citi also launched tokenized depository receipts for private company shares using blockchain infrastructure operated by by 6, with Citi serving as issuer and custodian. In other developments, structured credit is moving on-chain too. Securitize expanded its tokenized AAA CLO fund stack over to Solana. Athena Labs is planning a $250 million allocation. BNY serves as the custodian for the underlying assets and sub-advisor through BNY Investments. This is a very different signal from the last cycle. It's not just tokens chasing yield, it's institutional credit being packaged for on-chain collateral and settlements. And in other news, Sam Bankman-Fried has exhausted his appeal at the circuit level, with the Second Circuit's unanimous panel calling the government's evidence robust and rejecting every argument his defense raised. That leaves him with just 2 narrow paths now. He can either petition the Supreme Court to take up the case, which is a long shot given how rarely the justices grant certiorari in fraud appeals, or he can seek to secure a presidential pardon. Put it all together, and this week was about infrastructure catching up with demand. Active ETFs, regulated perpetual futures, stablecoin payouts, tokenized private markets, and structured credit. Prices are recovering, but the bigger story is the financial system absorbing digital assets piece by piece. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.